Today, major cryptocurrencies rise amid news that crypto could soon be allowed in 401ks. Ripple moves deeper into the stablecoin space. And Stephen McClurg of Canary Capital provides his outlook on altcoin ETF applications. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the green once again this morning on excitement that Bitcoin and other digital assets could soon be coming to 401ks. We'll have more on that in just a bit. As of noon Eastern, Bitcoin climbed back above the $116,000 mark for the first time in a week. Ether rose nearly 4.5% to more than $3,800, and XRP traded above $3 for a second straight day. Okay, let's talk about the top stories. President Trump is expected to allow crypto and other alternative assets in 401ks. As of noon, the president was set to sign an executive order today directing the Department of Labor to review private market investments in 401ks and other contribution plans. Those types of plans have minimum standards that are governed by federal law, but the directive could clear the path for crypto as well as private market assets like private equity and real estate to be added to portfolios. Private market assets have traditionally been excluded from 401ks due to fees, lockup periods, and lack of transparency, which makes them riskier investments. Similarly, crypto has historically been more volatile. That being said, the Labor Department in the first Trump administration found that private market exposure in 401ks was appropriate under certain conditions, something the Biden administration later affirmed in an updated letter, but limited the scope to certain professionally managed funds. While more symbolic than structural right now, it shows that established digital assets like Bitcoin are being taken seriously in the retirement planning conversation, which could help make them a mainstay of U.S. financial infrastructure. Next, Ripple is acquiring the stablecoin payments platform Rail. Ripple said it's paying $200 million for the acquisition, a deal that would boost Ripple's standing as a leader in digital asset payments infrastructure. Rail, which was formed in 2021, helps businesses move money between fiat and stablecoins. Ripple launched its own stablecoin, RLUSD, at the end of 2024. That token hit a $500 million market cap last month, according to CoinMarketCap. Finally, a Manhattan jury yesterday found Tornado Cash developer Roman Storm guilty of conspiracy to operate an unlicensed money transmitter. The jury was not able to reach a unanimous verdict on the other charges, including conspiracy to commit money laundering and whether he conspired to violate international sanctions. CoinDesk reports that a sentencing date has not yet been set, and that right now it's not clear whether prosecutors will elect to retry Storm on the remaining charges. Back in 2023, Storm and the other Tornado Cash founder, Roman Semenov, were charged with operating the crypto mixer Tornado Cash and allegedly laundering more than $1 billion in criminal proceeds. All right, for our main story, Crypto World's Talia Kaplan sat down with Stephen McClurg, the CEO of Canary Capital, to discuss spot crypto ETFs and advancements for digital asset regulation in the U.S.
Stephen McClurg, thank you very much for joining us here in studio.
Thanks so much for having me, Talia.
Absolutely. So the last time we spoke, you were the CIO of the asset management firm Valkyrie, and we spoke in person back at the end of 2023, and that's right before the SEC gave the green light for spot Bitcoin ETFs. At the time, you said you were optimistic they will in fact get approved by the SEC, and sure enough, you were right. Well, now you're the CEO of the investment firm Canary Capital, and so I'm wondering, you have all these applications now with the SEC for spot crypto ETFs tied to altcoins, including XRP and Litecoin. So I know you can't talk about these specific filings, but what do you think happens with those filings in general, with those spot crypto ETFs tied to altcoins?
Well, the SEC has been working very closely with the exchanges, NASDAQ, CBOE, New York Stock Exchange, over the last 6 months to create a generic listing standard. And that got published in the last week. So what the generic listing standard will do is give at least some standards so that you don't have to go through an entire process like we did with Bitcoin with other cryptocurrencies. That generic listing standard largely looks at futures. And does this token have a futures market in the US or not? And that's one of the qualifications. There's several other qualifications that also apply to other commodities. But if you look at what's proposed and what's public, it's still in the 21-day comment period. But once that's over, we do expect to see a lot of altcoins launching probably in September, October.
Now, you also have applications pending with the SEC for staked crypto ETFs, including the staked Tron ETF. So I'm wondering, what was the reasoning behind applying for those products, specifically the staked portion?
Absolutely. Well, my background is in fixed income, so I understand yield more than I understand anything. So one of the things that I wanted to do was create ETFs where you can actually generate yield and then distribute that yield. That yield is very valuable. So for instance, when ETH was launched a year ago and approved for ETFs, it did not have staking. And if I can buy ETH on an exchange like Gemini or BitGo or Crypto.com, I can get a 3% yield on my ETH. But if I buy an ETF, I don't get a yield. So that's income that's lost. So my purpose was to file for ETFs for tokens that you can validate and get a yield on and then distribute that yield to the end client.
So obviously all these filings are taking place amid a backdrop of a more crypto-friendly administration and SEC. So I'm wondering, did that play a role in your decision to put in these applications specifically now? And what do you think has changed overall for crypto since we saw this new administration go into office?
Yeah, so we actually launched Canary in September of last year,
right,
and began working on ETFs right after that. And you know, we filed in October before the election, but that was sort of a not necessarily a free option, but an option on him winning and a change of administration and a change of the SEC. So of course, when after the election, things really went in a positive direction. Crypto in general went to all-time highs post-election, and also in the inauguration was an all-time high for Bitcoin as well. So most of the promises made in crypto have been kept. I think some of them are still being worked on from existing laws, but we have a stablecoin bill that just got passed, which I think is great. We have a framework that the SEC has been working on. We have the generic listing standards, which the SEC has been working on. And it overall has been a very positive vibe in this ecosystem, as well as the way prices have managed to move up higher as well.
And we'll talk more about those regulatory advancements for crypto here in the US in just a bit. But when you were the CIO of Valkyrie, Valkyrie was actually acquired by CoinShares, the ETF business was, and crypto ETFs, big focus for you at Valkyrie. Now at Canary Capital, it seems to me like crypto ETFs are also a focus for you. Is that a fair statement?
Yeah, it is. It's a big part of our business, and was a big part of our business as Valkyrie as well. I fell into ETFs accidentally, and I haven't been able to get away from them. So,
clearly.
but my background is actually active management of hedge funds. So that's what I did in fixed income, and then I fell into ETFs. We also ran hedge funds at Valkyrie. We had run a hedge fund at Canary, and that's actually the first product we launched was a hedge fund for Canary.
Interesting. Now, going back to the SEC, just last week, the SEC voted to approve orders to allow in-kind creations and redemptions by authorized participants for crypto ETFs. So I'm wondering, what changed, if anything, for crypto ETFs with this development?
Well, that should have been available all along. Most ETFs have both in-kind and cash creates and redemptions. But they limited it, under Gary Gensler, the SEC limited to only cash. That actually prevents you from taking advantage of all of the tax benefits of an ETF if you're depositing in kind or taking redemptions in kind. But now with this new administration, they're opening that up. Now, APs still have an issue. So not all authorized participants will be handling in-kind creates. They'll still primarily only want to do cash, just because they don't have the functionality to handle crypto. Some do though. So we do expect to fully see a lot more people probably redeem out of some of the products that exist on a non-tax basis, and even put Bitcoin and other cryptocurrencies in on a non-tax basis.
Going back to crypto regulation here in the US, you mentioned the Genius Act stablecoin regulation bill, which is now law in the US. Many in the industry have categorized the development as a watershed moment for the industry. How would you categorize the development, and what do you think changes for crypto now that this is in fact law?
Yeah, so I've always viewed stablecoins as an instrument that could fall under the category of money market mutual funds, which means that they are not a registered instrument. But what they've mostly done to avoid that is distribute the yield that you get from the underlying bonds. So if you think about what a money market mutual fund is, it's a mutual fund, a 40 Act, that holds treasuries and other fixed income instruments that produce a yield, and then they deliver that yield. What stablecoins have done is they've held those money market instruments without distributing the yield. And it's really been in a gray area, but what this law has done is define what the gray area used to be, so that stablecoins can now be used as money, but it also prevents you from distributing the yield made off of that stablecoin, because that would clearly become a security or a registered investment company or 40 Act.
McClurg also provides his outlook for Bitcoin's price in the second half of the year. You'll be able to check out his full interview over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.